Hey guys, how's it going? This is Tim, and today I want to answer this question: how to invest during bear market, or more specifically, how to invest in cryptocurrency during a bear market. Now, if you guys have been with us for a while or just joining in today, whatever the case might be, let me tell you the situation with cryptocurrency. Currently, we are in a bear market, and during a bear market, cryptocurrency is going to fall down, and no one knows when it's going to stop falling down. That is basically the bear market. But investing during a bear market is tough because let's say you invested in at 5,000, and right now it's under 5,000, it's under 4,000, it's around 3,400. So you just basically lost 20% or 20-30% ever since you invested during that $5,000 mark, maybe a couple weeks ago. So cryptocurrency falls and fall and rise very quickly. So sometimes you invest in and it keeps falling down. And there is that phrase, buy the dip. When it dips, buy more. When it dips again, buy more. And it's kind of funny. It is a good strategy. However, in reality, it's kind of hard to keep doing that. Because if you buy in at 5,000 and it falls down to 4,000, you buy the dip, buy more, and it falls to 3,000, you buy more. And let's say it falls to 2,000 and keeps on dropping. So you seeing your account, you keep on seeing it fall down. And your mindset during that is, I'm losing more money. Every time I invest in, I'm losing more and more. And I know that feeling. One of my initial emotion during the cryptocurrency when I first got in was, oh my gosh, it fell down by $5, by $10. I am losing money. Why did I invest? And I really wanted to sell it and get out. But being in the market for it's not too long, maybe a couple years or so, I've had a bit more of a stable emotion and mindset. And what I do is I enjoy buying the dip because I could get in at the cheaper price. And whatever my total account might be does not really matter because the bear market is not a permanent thing. When there's a bear market, later on, it also comes a bull market. Now, that might not be the same for the traditional financial sect, for stocks and stuff. Maybe you could see some penny stocks go down and stay down forever. However, for cryptocurrencies, they do not tend to follow that direction, at least for Bitcoin and for some of the higher cap coins out there, some more trustable cryptocurrencies. They fluctuate, but at the end, they still come back up into the bull market. So that aside, with all that background given to you, how do you invest during this bear market? Now, one strategy is buying the dip. Whenever it falls down by a lot, you buy it again. But that strategy is, I think it's more for experienced people, and even with experienced people, it's really hard to do it. But another strategy that I use and that I find it's one of the more stable strategies out there in investing into cryptocurrencies and Bitcoin, and that is dollar cost averaging. Now, dollar cost averaging might sound like this complicated investing strategy, but it's basically, it's very simple in the essence. So first of all, you pick a cryptocurrency or two. I would say just start off with one, and probably the best crypto to start off is Bitcoin. I didn't really start off with Bitcoin, but I got into Bitcoin really closely after I got into cryptocurrency. So Bitcoin is a very safe bet to start off with, although quote unquote safe. That's very subjective, but this is simply my opinion. Let's say you get into Bitcoin, so you pick a cryptocurrency or two, and for example, let's pick Bitcoin, and then you set a timely purchase. So let's say you want to do it every month. Let's say on the first day of every month, I'm going to put in this much amount. Let's say you earn quite a bit. You want to put in $500 every month in the first day. So regardless of what the price of Bitcoin is, on the first day of every month, you're going to put in 500 and keep that strict discipline throughout, let's say throughout the year. And after a year, you contemplate again. Is this working? Should I do this for the next year as well? And you make that decision. You decide that it is worth it, and you continue on and so forth. Now, I believe the dollar cost averaging, you could do it basically any time throughout the year. But I think it is the most efficient, most effective during a bear market. Because as the cryptocurrency keeps on falling down, you're getting a cheaper price every time. On that first day of the month, you got in at this price, and the next month it goes out even more. So you get in at a cheaper price and a cheaper price, and it keeps on going. Now, as for the bull market, it's a little more dangerous, I would say, because it keeps on getting more expensive. But for the strict, disciplined people out there, they could invest in whether it's bear market or bull market. At least for me, I'm a little more comfortable investing during the bear market. But that said, dollar cost averaging is one of the most stable strategies out there for investing into cryptocurrency. There are many articles out there, and if you guys see the chart of Bitcoin, it is pretty volatile. It goes up and down, up and down. It went up crazy during end of 2017, and now it's going down, back down again. So with these volatilities, it is very nice to have a stable investing strategy. And as it says in the article, it says low risk and low reward. That DCA strategy is boring. I think that can be very subjective. I would say there is a lower risk and lower reward than trying to time the market. But sometimes that reward might not be low. It might actually be far superior than when you're trying to time the market. Because if you guys have tried to time the market, you cannot do it. You simply cannot do it unless you know intense technical analysis. And even with that, you cannot really time the market. You can guess the percentages of when this will fall, or how much this will fall, or what time this will fall. But at the end, you cannot time the market. The market is volatile. Whether it is cryptocurrency or traditional market, is always going to be volatile. So I would say dollar cost averaging is one of the most stable investing strategies out there, and it has proven to work. If you look at some YouTubers like Peter Saddington, where he operates decentralized TV, basically one thing that he did was he dollar cost. He even till today he dollar cost averages into a couple of cryptocurrencies. And there is a video on him dollar cost averaging into Litecoin. And basically, I believe he put in around $10,000 to $20,000. I think it's more around $10,000 into Litecoin. And at the end of a year, I believe that 10,000 grew to about 200 or 300,000. I'm not sure the exact number, but his Litecoin stash basically maybe 10x or 15x, 20x, somewhere around there. But he was able to have a disciplined strategy of a stable dollar cost averaging and reap that reward at the end. Now, that might not be the same for you. You might only get like 1.5x, maybe 2x, maybe 5x, 10x, who knows? But All I'm saying is that this is a disciplined, stable investing strategy, and I am more comfortable using this strategy during a bear market, as you can get cheaper and cheaper coins, and you could accumulate into your bags, and after that patient waiting time, you will be able to reap the rewards at the end. And this is simply my opinion. I'm not saying to you that you should go out and do it. You make your own decisions, but this is what I am doing. And if you guys agree with me, that's fine. If you guys disagree with me, please comment below on why you disagree with this strategy or this mindset of mine. But that's it. I'll leave you guys at that. If you guys like this kind of content, like this video, comment below, and smash that subscribe button. Also, if you guys want to support the channel, check out the links below, and I'll really appreciate that. And as always, I'll bring you guys more deals on Daily Deals with Tim.